Let's start off with a look at those numbers out of National Bank of Kenya. It's said that pre-tax profit is up 25% for the 2010 period, and as I was saying earlier, pretty much in line with the kind of profits we've seen being raked in by many of Kenya's banks over the last reporting season.
Thank you very much, Alishia. Basically, just as you noted there, National Bank has come out with their numbers, which are fairly good, and especially noting the history that the bank has had, especially over the recent past. We've seen it try to work on its bottom line, and that is fairly positive. And also, another highlighting point is the fact that they have paid a dividend, which is very good, especially noting that they have not paid dividend for quite a while. 25% is very good, especially looking at how the other industry players have been performing, only that we are hoping that the momentum will be sustained going forward.
Well, of course, it's swung to massive profits over the past decade or so. What's your outlook for National Bank of Kenya moving forward? And are you a buyer at this stage? Is that resumption of a dividend payout acting as incentive enough?
Well, the incentive for the dividend resumption is very good and very encouraging, especially for anybody who is looking towards buying a stock that is going to bring in some bit of return. But going forward, I guess the bank still has a lot to do. When you look at National Bank and compare it with some of these more aggressive banks like Equity, KCB, who you've seen expanding to the region as well as trying to improve their loan book, National Bank has been fairly conservative in terms of that approach. And also one of the other things that have made most investors cautious about it is the fact that the government still controls a significant stake of National Bank, and there has been talk about a strategic partner coming on board, the government doing a secondary IPO, and because of that, the uncertainties surrounding the stock have been fairly high. In terms of being a buyer, yes, definitely I would be a buyer just to take a position on the opportunities and potential that it still has, but I guess the challenge is on the managing director to be able to try to be able to sustain the momentum that you're seeing now. Well,
of course, National Bank of Kenya up more than 9% so far this year. In the meantime, we had Kenya's Pan-Africa Insurance post an almost fourfold surge in full-year pre-tax profit. Overall impressions of the numbers released there?
Thank you very much. Well, looking at insurance, basically that was quite a surprise result performance, because even judging just from how the market reacted to the news, basically the stock jumped significantly in terms of the share price yesterday, and looking at it in terms of the demand that we saw, the trend might continue going up. One of the factors that are very good about it is that they have announced a bonus issue of 1-to-1, which shows that they're trying to increase the number of shares in the market. That will make it a bit more liquid. But look at it in terms of the performance, that's the bottom line, fairly good, and hopefully, especially because the bank, the company has over the recent past has not been able to sustain such kind of performance. Hopefully that's going to be carried on going forward. But in terms of their premium income, I guess they still have a bit to do, because most of the revenue seems to have come from the investment revenue, which again, looking at how the year is going, might not be as sustained.
Absolutely. With that being the case, on the one hand, when it comes to gross premiums, I mean, those rose 27%. But it's interesting to see, you know, that this is in a context where we know the insurance market isn't very well taken up over in the East African region. Just how much risk are you pricing in fact, on account of the fact that this is a picture that could change potentially quickly, both on the gross premium front and on the investment income side of things?
Excellent observation there, Alishia. Basically, looking at it in terms of the industry, especially as an insurance sector, the performance has been mostly buoyed by investment income, especially for most insurance firms. But looking at it in terms of going forward, I guess they have been trying to improve their product offering as well as trying to penetrate into the market. And I would expect Pan-Africa to be able to try and see how it can be able to also remodel itself to come up with more products, to be able to encourage people to take up insurance. As you said there, in Kenya, we are seeing a lot of, very few adults have taken up insurance policies, and if at all they can be more aggressive on that front, it would really boost their premium income, because looking at it even from the claims front, as we are going towards elections and the normal risks that come along with that, definitely going forward, the position of the insurance sector is still a bit uncertain, and it's a challenge for them to be able to still chart the way forward and especially sustain the kind of performance that we've seen, especially over 2010.
Of course, maintaining a lower claims ratio and also, harnessing more from the investment front is a little less out of the company's hands, as is cost control, and that seems to be a problem that the company is still trying to get a handle on. It's saying that it has a tight cost management in play. Any detail on just how much so, and what kind of strategies it's looking to employ to get more of a handle on that front, on the cost front?
On the cost front, basically what we've been seeing most of the institutions have been doing, especially looking at banks, and I would expect even the insurance companies to try to do is to try and invest a bit more on their ICT front, just to reduce on labor and try to increase on capital investments so that they can be able to divest as well as take advantage of what the ICT is providing, especially in terms of managing their claims, managing their premiums, as well as trying to ensure that they can be able to still cover a significant part of the market that is there, or even in terms of growth. But looking at them, especially in terms of cost, we've seen Pan-Africa has been fairly quiet, I must admit, especially most of that last year. And I guess that's the kind of restructuring they've been trying to work on. And going forward, I guess the bigger challenge will be to try and ensure that they still balance so that they don't, again, concentrate too much on cost management at the expense of the bottom line.
Let's get through a few more companies here. Standard Group, another company out with numbers. It's lifted annual pre-tax profit by 20%, total revenue up 12%, and earnings per share up 4%. And it seems that it's the company's diversification into outdoor advertising and those strides having been made last year that's now starting to pay off.
Yes, thank you very much. We're looking at it in terms of the performance. First of all, 4% growth, I guess, has not augured so well with investors, and so the share price, we saw it not even being able to sustain from 40 shillings and above where we had seen it perform at. And because of that, I guess the challenge is for them is to try and see how they can now convert most of their investments, especially the fact that they built a new ultra-modern facility, and also some of the other expansionary measures that they took up. Hopefully, they're going to be able to turn that into now profit in terms of, just as you said, they are venturing into outdoor advertising, and we are seeing as well there's a lot of potential for them, and especially looking at it in terms of its rival Nation Media Group, which we've seen their performance has been fairly stellar. And so because of that, I guess Standard Group still has a bit of work to do, and hopefully they'll be able to position themselves very well to take advantage of what we are seeing, especially with the GDP growth. It positions them well to be able to provide advertising for most of these firms. And going forward, I guess I would still be a buyer on Standard Group. There's still a lot of potential there.
Of course, one of the big challenges there is that weakening shilling. It's posing a challenge to maintaining the cost of production, which is already rising. And another player that weakening shilling is affecting is Athi River Mining. That company posted a 17% rise in full-year pre-tax profits. Yesterday, earnings per share rose to 8 shillings. Your outlook for Athi River Mining, which has hefty expansion plans in the pipeline?
Well, thank you very much, Alishia. That's a good observation about the industrial sector, especially noting what we've been seeing on the forex market, which is really affecting a lot of the importers. And looking at it in terms of the river mining, basically most of last year, that's one stock that we've been watching and monitoring very closely because of the potential they have, especially the expansions in Tanzania, as well as the new plans they're trying to come up with. Looking at it, especially in terms of what is happening now, in terms of the future outlook for the company, there's a lot at stake, especially because of some of these risks that we are seeing, especially the forex risks that we are seeing at the moment. But in terms of their expansion program, I guess they are quite on track, and investors are still keen on that. But honestly, I guess their performance was already factored into the share price, and so we saw the share price did not jump as much, and right now it's still within the 170, 160 range.